Yeah.
Kevin, can we start the webcasting, please?
Okay. Are we good to go?
Yes, we are, Chairman. Thank you.
We're good. Excellent. Okay. Well, if I can welcome all members to the meeting. Thank you for joining us. Can I ask if there have been any apologies, James, at all to this meeting?
Nothing that I've received that wasn't. Obviously, Karen Murray is here now after the previous.
After previous apologies, yes. Okay, that's fine. Welcome, Karen. Also, can I welcome Graham Bell, who's here as an observer and at the meeting today. Graham hopefully will be joining us on the committee as an independent member once the board has approved his appointment. So welcome to you, Graham. Unfortunately, at this particular meeting, because you're an observer, you won't be able to ask any questions, but hopefully next time. Thank you.
Thank you.
Excellent. Okay, now the other thing about this particular meeting is that it's not a formal meeting of the Audit and Governance Committee, but it's being held as a consultation call by the Finance Director under the delegated powers of the Finance Director to take action in consultation with members of the committee, further delegated to the Financial Controller because Ian Craven's not with us today. And following the consultation call, the Finance Director will take delegated actions having regard to the consultation. The agenda and reports for the consultation call are being made available to the public, and the call is being live streamed on the Transport for the North website to ensure openness and transparency. Members of the committee will attend the call virtually this time. This consultation call will replace the Audit and Governance Committee scheduled for today, 10th of June, but which has been cancelled due to the ongoing COVID-19 restrictions. So although we're having the meeting, the COVID-19 restrictions and changes only allow us to have this virtual meeting under these arrangements. So if I can now move to declarations of interest. Have any members got anything to declare? Personal, disclosable, pecuniary interest that they may have relating to items on the agenda? And if so, state the nature of such interest. So I'll just pause there if anybody would like to raise their hand or make any comments. No? Okay, good. Thank you. So that takes us to item 3, minutes from the previous meeting. So if we can just run through those, please. Before we do that, though, once again, these can't be approved as such. They can only be noted at this stage because of the nature of this meeting. So, turning to the minutes from last time, 18th of February. Any changes or comments for page 1? Page 2? 3? 4? 5, 6, 7, and finally page 8. Okay, no comments or changes required. Okay, thanks very much. We can take that forward. Excellent. Okay, so that takes us now down to item 4, and item 4 is the monthly operating report. And I think, Paul, you're going to take us through this one.
Yeah, happy to, Chair. Yeah, so monthly operating report for April, but not intending to go through the report line by line. We'll take it as read. I think the one thing that members may have noticed is that there's a small section within the finance area that's new. Or that maybe they haven't seen before, which is around expenditure control. And I thought it's worthy. I thought it'd be a good thing to just to highlight that, because you may well see it again in future monthly operating reports. Essentially, what we've decided to do, as a consequence of the funding arrangements that were put in place in January of this year, which is a little bit tighter than they have been in the past. We've felt the need to be more proactive in terms of activity management and budget management. So where previously we would be on a quarterly cycle of budget revisions, we've effectively moved now to a monthly cycle. So the view being that if we start seeing trends in a month, as we have in April, then we start to take mitigating action without delay. And what members will see with the May operating report, the May monthly operating report, when they meet in July, is you'll see the mitigating actions captured within there for the purposes of them being ultimately be reported to the board. The ability to do budget variance sits with the finance director and the chief executive of the organisation. So what we're talking about is just effectively where we identify areas of possible underspend or slowdown that we are replacing with activities that support the business plan that would see activity being delivered in the year, and therefore we are meeting our allocation requirements. So happy to take any questions on that matter or anything else within the report if people have got if members have got questions.
Any questions?
Just a quick question around the closing down of the IST programme. I take it, Paul, that isn't a pause as such. It is a complete cessation, because in the minutes from the last meeting, there were some questions around that, and I think Ian had indicated that there might be the possibility of retaining some IST capacity, given the priority of IST for the board. So, but it looks as though, from what reading between the lines here, that it has actually been completely closed down, has it?
Well, the actual programmes themselves, and again, it'll be a matter that will also come up in the next agenda item as well. So the actual programmes that were in place within the IST programme have been closed. The funding for them has been ceased. But what we did in the budget for this year is that we created a strategic IST role, which is to sort of manage and coordinate activity across the region, to be able to react to possible opportunities. That role hasn't been filled yet, but it's out to be recruited as we speak. It's quite a challenging role to fill, actually, in terms of remit, but we're hopeful that it would be filled. So there is a degree of capacity, but it's more around strategic management and coordination as opposed to what was previously there, which was about delivery.
Thanks, Paul.
Okay, Keith.
Yeah, thanks, Chair, and thanks, Paul, for that update. I think just on the IST, it was important. It's important to note that there was such a lot of knowledge and expertise in that area that the committee wished to ensure that some of that was retained within the organisation as we need to go forward. And who knows what changes are going to have. Interestingly enough, the new government policy is for more integration between bus, tram and train, and better facilities on ticketing, which we've been wanting to try and introduce now. Unfortunately, the government wouldn't give us the support that we needed on that. So I think it's imperative that we keep some of the staff and we keep some of that knowledge which has been gained over a long period of time. Thank you, Chair.
Thank you.
Could I just respond, Keith? I think it's probably worth mentioning is that all the staff involved in the programme have either left or been made redundant. That was a decision made by the board previously. Because they were involved in programme delivery. The ability for one of those roles to be considered for a strategic role within the organisation going forward, the individual chose not to pursue that option. So we weren't able to retain any of the expertise from the programme. I think there's a discussion and argument about, is the skill set different? I mean, there are the skill sets in terms of what we're expecting from the role now in terms of coordination and management is very different to what it was previously, which would have been about programme delivery. So I just wanted to make sure that we didn't, there was no uncertainty around that, basically.
Thanks, Paul.
Okay. Right. Just a couple of observations from myself, if that's okay. Sure. Under the finance and procurement section, good to see the budget uploaded okay there successfully. So that's very, very helpful for the new year. And also I noted the new risk system predicts. I guess the new risk reports are now being done on that system.
Is that Paddy? Paddy's on the call.
Paddy, are you on the call?
Yes, Chair.
Yeah.
Yes, so the risk management system is currently being embedded across the organisation. We've got a few more trainings to complete. The final one will be with our OBT members. Yes, we will start using Predict to produce reports for different board meetings. Okay, thank you, Hadi. Couple of other things under HR noted. Obviously, the board chair, TFM board chair, John, is retiring. 27th of July, I believe, is the last board. And we know that his replacement is being worked on. And also to note that Martin Tugwell officially joins TFN on the 2nd of August. He's obviously operating under an interim arrangement at the moment. So just so that members are aware of those two items if they missed it in the report. Okay. Any other points that you want to make there, anybody? The other thing that I noted there was the KPIs. They're up and running in the report. Only a couple of, mainly green, couple of yellows in there. But I'm just really wanting to double check on behalf of the committee whether there's anything that needs to be brought to our attention on the KPI indicators at this point.
I wasn't intending to bring anything specific, Chair. Was there any particular items?
There's none red, and there's 2 or 3 yellow. The Northern Powerhouse Rail. It's just making sure that we keep an eye on them, really. And as the report is now part of the operating report, then it's important that we keep a track of it. But clearly, most things are either green or not started yet. Couple of yellows, just getting assurance really that there's nothing of concern to bring to the attention of the committee.
Nothing in particular,
no. Okay, that's fine. Okay, thanks. Right, is there anything else to comment on this particular item on the monthly operating report, or are we going to move on, Paul?
Happy to move on if you are, Chair.
Yeah. Okay, let's move on to the financial outturn report then. Item 5.
Yeah, that's myself again, if that's okay.
Yeah.
The reason why we do this report is twofold. I think first and foremost, it allows us to put a flag in the ground for the end of the year, and so we track obviously we submitted the budget in late March, where we had a forecast position of what we thought the closing reserves would be, and what reserves would be needed for the following year. And what this report does is it just updates that and refreshes it to the actual closing position, which therefore gives us, mainly from a financial perspective, a very clear view of what the position was at the 31st of March 2021. It also starts to introduce the balance sheet and the matters that are the items that members would see when the statutory accounts are submitted in due course, post the audit. The actual audit is going on as we speak right now. In terms of the first point about updating for actual outturn, I mean, so from a core perspective, we in early March we thought we would need about £7.42 million of core reserves. we actually did need at the end 7.29, so it's quite close, a relatively modest adjustment for year end. But again, it just allows us to fix those reserves now and to see how they would be best utilised over the next 3 years. In terms of year-end accounts and the balance sheet, that's another section within the report. I think there's probably a few things to highlight there, and some of them are linked to the earlier conversation. I think the first thing members may well notice is the fact that we've moved from being an overall net asset position to a net liability, which is driven. The movement is driven by two main factors. One being the way that we've treated intangible assets, and the second is the treatment of the pension liability. In terms of the pension liability, we have the benefits of Ewan Miller on the call from GMPF, and Ewan in a moment. Ewan will do a presentation on the pension fund and allow members to raise whatever questions they like in relation to our accounts and possibly how it correlates to other organisations as well. But just going back to the first point about the balance sheet, the balance sheet is a little bit different. So essentially, the funding announcement in January, where the funding for the IST programme was ceased. As a consequence of that, we made a decision and felt that we couldn't carry the intangible assets any longer because either they were disposed and transferred back to the department, or they were in the process of being transferred back to the department. And as a consequence, the technical advice that we had was that the assets should be impaired. So the assets that we had in place on the balance sheet at January 2021 were effectively impaired and written off to the CAS. So it creates a lot simpler set of accounts from our perspective, but again, it's they're just somewhat different. And then the second point being that the pension liability has increased quite dramatically, and I think that's probably a good opportune moment to bring Ewan in to give a presentation on the pension fund. I suppose before Ewan starts, is there any questions on any other elements of the report before we got to the pension discussion?
Anybody?
Can I just ask that in terms of the treatment of intangible assets, does that include things like the sort of platform validators? Has that transferred across to that asset? Has that transferred across to the DFT?
No, the platform validators were never capitalised. They were.
Right.
We effectively, so the funding for that came through us to the various local authorities, but they weren't assets that were capitalised. The phase 3 assets that were capitalised, there was a FAIRS tool, disruption messaging, and what's called an open data hub. The FAIRS tool had been completed and transferred in the year, so effectively we were developing it to be then transferred back to the department. The disruption messaging and open data hub were tools that would have been potentially utilised on an ongoing basis going forward, but the department has chosen to introduce a different solution. So those assets the disruption messaging tool has gone back to the department. The open data hub will sit with us for a year. We'll support it for a year, at which stage at the end of the year, so on the 31st of March 22, the department will either take it or it will be effectively closed down as an asset. But so effectively the platform validators are held by the local authorities on their balance sheets.
Thanks for that, Paul.
All right.
Councillor Scott, if you could bring in Councillor Scott, please.
It's not a question, it's just a comment. It's a very full and comprehensive report and very easy to follow through. So thank you very much. And I think it is, if you can understand it in the way you're going through, I think that's good for all of us. So thank you.
Yes, I'd support that too. It's a very comprehensive report indeed. One of the things that struck me in it too, though, was talk about some of the savings that occurred really last year as a result of the pandemic. Certain activities were really kind of put on hold. I'm thinking particularly of stakeholder engagement and savings due to travel and other things like that. Obviously, as the economy opens up again and we move back into more normal working, will those costs then come bouncing back? And have we got some sort of provision for those further down the road? Or have
Yes,
permanent savings?
I mean, a very small, modest amount of activity that was anticipated to be delivered between, say, in March 21 that wasn't delivered. A small element of that might be captured in revision 1 when we revise the budget. But essentially, the activities that were deferred were captured in the budget for next year. So we have things like a conferences in there. Moving to physical meetings is in there, away from the virtual meetings that we have, and what comes with that is the accompanying travel costs. So we've budgeted on a more business as usual basis. But if you're able to tell me what we'll be doing in July and August, I think you'd be a lucky person. I think we'll just have to see what pans out, and from government advice in terms of what does the landscape look like.
Okay, thanks. Can we bring in Councillor Robinson, please?
Yeah, thanks for that, Chris. Yeah, just one sort of question I wanted to ask, really, because obviously the report highlights the kind of fact that the lack of long-term certainty about the kind of funding situation of TFN, because obviously it's predominantly sort of dependent on central government grants, and we did have the issues earlier on in the sort of previous financial year where the government cut the grant back. Are we internally kind of doing some stress testing and sort of work that if the government chose to make additional cuts to our grant, which, by the way, I believe would be completely the wrong thing to do, how we would cope with that? Are we kind of just doing some scenario planning if that scenario did occur, basically, just so we can be belt and braces if that arose?
To a certain extent, yes. The challenge is, what do you set the plan to be? I think we've got commitment for this year in terms of the MPR, the IST, and core funding arrangements, and we've got a CSR comprehensive spending review which is due in. Well, we anticipate, we would hope it to be in mid to late summer. I think. And then next thing is the IRP. I think so. And we've had the Williams review. So there's various pieces of information that start to come together that then start to shape what the future might look like. And I think as part of the business planning process for next year, yes, we would have to consider what's a realistic landscape, and therefore what's the realistic structure for the business and the business plan that would support it. So is that? I mean, we don't have any, specific plans that says, well, based on scenario X of, let's say, a dramatic cut in core funding or say a removal of MPR funding. We don't have those scenarios, but I think the IRP may well inform that agenda for the position from April of next year.
Okay. Any further questions before we move on to the pension fund update? Okay, back to you, Paul. Thanks.
Thank you. So, Ewan, are you able to come in?
Yes. Good morning, everybody, and thank you for inviting me to attend today. I think slides have been distributed, but I wonder if it's worth me trying to share my screen. Just might be easier for everybody if that's okay.
Yeah, that's good. Thank you.
Fingers crossed. This is where you get nervous, isn't it? Can people see that? Yeah,
that's there.
Okay, great. So my name's Ewan Miller. I work for Greater Manchester Pension Fund. I look after all the things that aren't investment or member administration. So things like maintaining relationships with our employers. I'm a consulting actuary by background, and I sort of manage the relationship with our GMPF actuary. GMPF is part of the local government pension scheme. the LGPS is a single scheme in England and Wales legally, but it's administered on a regional basis. So there's roughly 87 regional funds. GMPF is the largest one of these funds. We've got nearly 27 billion of assets. We've got about 400,000 members and about 650 employers in the scheme. These include the 10 councils, Combined Authority, Transport for Greater Manchester, Transport for the North, and a lot of education employers like universities, colleges, academy schools, housing associations, and then all the private sector providers that these organisations might outsource services to. So we end up with quite a lot of employers, and the administration is obviously quite complex. The first slide I've got summarises how a defined benefit scheme such as the LGPS works. So you might like to think of it as almost a sort of bathtub. We have money going in, which is sort of equivalent to the water coming out the taps, which is member contributions and employer contributions. These are invested up until the point we need them, and we need them to ultimately pay benefits to members. So members will get pensions from the scheme, they might get ill health retirement benefits, and we also occasionally pay out death benefits. So the analogy I sometimes use is this bathtub. And we like to keep the bathtub full. We have limited control on what comes out, the benefits being paid out, because the benefits are set by government, and it depends on the pay awards that employers give to their staff and how long staff live for, what future inflation is as well. We do have some control over the money going in. We get to set employer contribution rates every 3 years. And we also have control over investments as well. So I'll come on to more detail to the investment point, because that is really quite key in what's sort of driving the numbers that you're looking at here. Another big question is kind of what size the bathtub needs to be. So that's largely determined by the actuary. So the actuary will make a series of assumptions around things like how long people are going to live, what future inflation is going to be, and what members will choose to do when they have options that they might want to exercise in terms of taking cash at retirement and whether to retire early and these sorts of things. You can kind of think of it as a balance sheet. So what you're ending up comparing is a current value of the assets. This is largely a statement of fact, not entirely, because we do have to make some assumptions about how we value liquid assets. We don't have a market value, but it's almost a fact what the fund assets are. But what the cost of meeting all these benefit promises that we made is a subjective thing. What they actually needs to make assumptions about. If we sort of compare it as a balance sheet. If your assets are bigger than what we know as the liabilities, meeting all the benefits in future, you could say you're in surplus. If it's the other way around, where the expected money you need to hold now to meet all these benefits in future is more than the assets that you've actually got, you could say you're in deficit. And the vast majority of our employers, when we do something called IS19, which is the measure of these liabilities that goes into organisations' accounts, are in deficit at the moment. I think you're not unusual at all in that respect. And we can work out this balance sheet across GMPF as a whole, so across all our employers, or we can strip it down to the individual employer level, or we can group it together into small groups of employers. For example, Manchester Council do what we call pooling, where they pool with a lot of similar employers, so organisations that outsource contracts to, for example. So we can kind of slice and dice these assets and liabilities in all manner of ways. Coming on to numbers, as I mentioned before, it's actually quite subjective, that the value we place on these liabilities. So there's two widely used measures. The first measure, what we call sort of funding, ongoing funding, is what we do when we need to work out how much contributions we need to receive. So every 3 years we do a valuation of the pension fund to calculate employer contribution rates. The last valuation effective date was March 19. Next one is going to be March 22, and we get a year to work out, do this valuation process and work out what the rates are going to be. So contribution rates changed on the 1st of April 2020, and they'll change again on the 1st of April 2023. The measure at the bottom, IS 19, is the figures in the report you're looking at. So this is a sort of prescriptive measure applied across most of the world, I think, to enable users of accounts to compare one organisation against another. So it doesn't really take into account the specifics of your pension scheme. It's just a sort of standard that enables users of accounts to make a comparison. And you'll notice that the numbers look a lot better on the top measure, this funding valuation, than they do on the bottom line, on the bottom set of numbers, and I'll come on to explain exactly why that is. So you can see that the deficit has been increasing steadily on this IS 19 measure. It's gone up from 3.6 million to nearly 12 million at the moment, but there's been less of an increase on that top line, that funding valuation. That is just an estimate, that March position. We don't actually need to do these figures now. We need to do them next March when we work out the contribution rates. But we think it's sort of remained fairly steady on that funding measure, but you have seen a big increase on that accounting, that IS 19 measure. And the funding level is only about 50%. You'll notice the liabilities are almost twice what the assets are on that IS 19 measure at March 2021. So you might be asking, well, why are those two sets of assumptions giving such different results? Most of the assumptions are very similar, so we would use broadly the same inflation assumptions, pretty similar assumptions about how salaries will increase in future, and we would use the same assumptions about how long people are going to live and other demographic factors, how many people are married and these sorts of things. But the big difference between the two figures is the future assumed level of investment return. So this is often sort of called the discount rate. So this is for each pound that gets paid into the fund, how much of an investment return we assume we can generate over the time that is held within the fund. So if you're paying a contribution in respect of a 25-year-old, we may hold the money for 40 years until we pay that person's pension. So obviously over 40 years with sort of compounding, you can make quite sizable investment returns. So even a small difference in this discount rate, this investment return assumption, can have quite a material impact on the figures. So as I explained on a previous slide, the IS 19 measure, it's very prescriptive. It's actually the yield and AA corporate bonds. So bond rating agencies and the bond trading market can give us figures about that yield. At the moment, you only get about 2% investing in corporate bonds of a sort of 5 to 10 year term. When I started out, it was more like 5%. But the other measure of liabilities, which is the funding measure of liabilities, that is actually based on the assets that GMPF holds. So most of our assets we would expect to generate a higher return than we would on AA corporate bonds. Things like equity, property, infrastructure, all expected to generate a higher return. And to give a rough idea, at the last valuation, we assumed we could get a 3.6% investment return per annum. We would probably assume something today along those lines, and we would do this funding valuation to work out contribution rates next year. I think we'll assume probably something in the region of 3.5%. Whereas under these IS 19 valuations that each company is required to do for their accounts, we're having to assume an assumption just over 2%. I think it's 2.05% investment return per annum. So when you're a relatively youthful employer like Transport for the North is, you haven't got deferred and pensioner members in the fund because you were only created a few years ago. There's the compounding effect sort of hits you particularly hard of this low investment return assumption in the IS 19 figures. The final slide I've got is just to sort of demonstrate what GMPF does invest in practice. So majority of our assets, as I explained, is in things that we'd expect to generate a higher return than corporate bonds, real assets that we'd also expect to be broadly correlated with inflation in the long term as well. So that's sort of set out in those pie charts. So I said to Paul I'd try and keep it to about 10 minutes and leave a few minutes for questions. So Chair, I don't know if I'll hand over to you at that point if anybody's got any questions they would like to ask me.
Okay, yes, thanks for that. We have got a question from Councillor Liam Robinson.
Yeah, thanks ever so much, and thanks for a really sort of informative presentation that I think kind of is simple enough for a non-financial layman like me to follow, but kind of detailed enough to actually kind of get into a bit more than just the slides that were sent through. So really, really useful. And I think we should also put on record our sort of thanks to GMPF for hosting TFN's pension fund, because obviously we need to find a suitable public sector pension fund to do that, and it's very helpful that GMPF have done that. I suppose there's a couple of questions I was going to ask. One was around, you mentioned how Manchester City Council, for example, do pooling with other kind of elements of the pension fund that are kind of similar to them. Does TFN do that at the moment? Because I'm very conscious that TFN's a very, not just new component of GMPF, but a very small component as well. So it'd be useful to know if TFN currently does that or should do that, particularly to make sure that kind of its liability, if you like, is proportionate, but also, crudely, that kind of other bigger players in your pension fund aren't necessarily able to pick up the slack for TFN in a way that kind of over the long term you'd want it to be equitable. So I'll ask that one first, and then I've got a question about investment a bit further along, if I can ask that separately as well. So.
Okay, so TFN isn't pooled with any other employers in GMPF. Where pooling is really valuable is for really small employers. So we have some contractors that literally only have 1 or 2 members, and they can be very exposed. So it's kind of law of large numbers. The bigger the employer is, the less risk there is from, say, a member of the big pension living till they're 110, for example. There used to also be risks around ill health, where members used to retire on ill health could get quite expensive. So we used to like pooling smaller employers with bigger employers to sort of smooth out some of these risks. The ill health one isn't a bigger factor as it used to be, because we kind of invented a sort of internal insurance arrangement at the last valuation. But small employers are still exposed to other risks like long life expectancy. So if TFN was ever to outsource any contracts, and we had to 2P transfer the staff in and make that employer join GMPF in its own right, we would advocate TFN pooled with them. But in the absence of that, there's no real sort of difference to TFN for pooling or not pooling, really. It is these sort of really small employers, I think, that gain the benefit of pooling. And Manchester Council have all manner of small contracts that it's advantageous to pool.
Okay. I suppose if we can move on to investments then. That was really sort of, again, useful to give us a bit more detail as to the things that GMPF invest in and the rates of return that you're looking for. I know one of the things that often gets spoken about in wider senses about how public sector pension funds potentially could be invested in locally, and particularly looking at kind of infrastructure projects. So I think it's in the Canadian teachers' pension technically owns the kind of the concession for HSS1. Now, obviously, that's a much bigger entity than the GMPF or any of the individual kind of pension funds across the north of England. But genuinely, has there been a kind of conversation about how potentially GMPF, potentially as a joint venture with some of the other pension funds across the north, could well be part of the investment portfolio for the kind of projects that we want to see happen across the north of England, things like Northern Powerhouse Rail, for example, because I would suggest certainly things like some of the kind of station investments that will need to happen could well generate a return greater than what you're currently targeting at this moment in time. And has those conversations potentially been looked at and begun? Because I just think there's a wonderful circular economy there if we can get that right. And I also think pretty compelling with government to actually say there's ways in which some of our resource from the patch can be invested to actually kind of make up the kind of overall financial contribution to make these things happen.
Yeah. I certainly hope we would be at the table in those sorts of conversations. So there's a few things. GMPF has a 5% allocation to local investments, which tends to be sort of developing properties within Greater Manchester generally. So we did with the One St Peter Square office block is an example of something we've done. We're also part of what we call the Northern Pool. So there's been an initiative in local government for funds to sort of pool assets with other LGPS funds to increase scale. So we're in the northern pool with Merseyside and West Yorkshire Pension Fund. And as part of this northern pool, we've actually got a direct infrastructure portfolio. It's something called GLIL. And we've teamed up with Lancashire and the London Pension Fund Authority as well to sort of give it bigger scale. We've got about 8 investments in that portfolio now. So we do have the rolling stock that runs on the line from London to Norwich is one of the investments GLIL's in. We don't own all of it. We own some of it. And Forth Ports is another one. We own a slice of Forth Ports. So we're kind of doing things around these areas that you talk about. And I think it's just the case of, if the opportunity arises and the numbers look right. I think we've had conversations around HS2, doing things around proposed HS2 stations and these sorts of things. But these are big numbers, and I think they take a long time to create a payoff as well. You're investing something that won't be built for 10 or 15 years and then might not actually generate a return for 20, 25 years. So I think we're a long-term investor, but that is even long-term for us. So it's about getting, government incentives in the right area to sort of create a cash flow profile that pension funds really want to invest in. And I think if that can be achieved, then I think it's something we'd be very keen on.
Okay, brilliant. No, thanks so much. Really, really useful to know. Yeah.
Okay, any other questions from anybody? Okay, can I just obviously bring out, I guess, the most stark number in the presentation, and if you look at the IS 19 FRS balance sheets and the 31st of March, we do have this difference of 11.89 million, nearly 12 million, which obviously is a significant figure given the scale of assets and liabilities. And is that, I suppose if I was to ask you, what's the single reason for that? Is that because of the skewed nature of the mix of employees for Transport for the North, making that so different?
So over the last few years, what we've seen is good returns on investments. So our assets are at an all-time high, but because of the continued low interest rate environment, and now we've even got a little bit of an uptick in future inflation expectations, the benefits have got very expensive to provide. So the employers that already had a lot of assets in the bank, very mature employers in the scheme, have done better than the less mature employers like yourselves, where you started at zero 3 or 4 years ago, effectively. So you've not benefited, unfortunately, from the good asset returns as much as a Manchester City Council, for example, who had 2 or 3 billion in the bank, which they've been able to generate the return on. You are likely always to have, unless something fundamentally changes in investment markets, you are likely ultimately to always have a deficit on this IS 19 measure. And the reason for that is we invest in these assets that I was discussing earlier that we expect to generate a decent return over the long term, 4 or 5%. And because we expect to generate a decent return over the long term, we can keep your contribution rates lower than we might otherwise do so. But then when you come to value these liabilities using an assumed investment return of 2% or 2.5%, like you're being forced to use under this IS 19, it's always going to create a deficit, unfortunately. This is a problem in banks and insurance companies have a real problem with this because it restricts the business they can do. They can't make loans and pay out dividends and all these sorts of things. So what they do is they invest their pension fund assets in AA corporate bonds and other things that will sort of mirror the movement in what they have to measure the liabilities against. But it feels kind of like tail wagging dog to do that in public sector schemes. What we're interested in is sort of efficiency over the long term in a cash sense rather than on an accounting basis year to year. So unfortunately, it's a public sector scheme which has been forced to use a very sort of corporate thinking accounting standard. That's the real kind of difficulty here, if that makes sense.
Mm-hmm. Okay, I suppose the $1 million question is: should we as a committee be worried about these numbers at this point in time? Hello. Sorry, can you?
Sorry, is this a question for me?
Sorry, question for you. Yeah. So, given the nature of the deficit there, but given all the reasons which you've outlined, at the end of the day, as an audit committee, I suppose really we're looking for, although you can't give any certainty about this, some sort of level of assurance that this is not something to be overly concerned with at this stage of the organisation's.
It is not out of line with many other employers in the LGPS, would be what I would say. GMPF is one of the better funded funds in the LGPS.
Mm-hmm.
So there are many organisations. Birmingham Council will have a deficit in the billions on this measure. But yeah, I don't think I can sort of say whether you should be worried or not. But all I can say is that it isn't out of line. And what is almost more relevant, I think, might be the funding valuation we need to do next March, because that will drive your actual cash costs for the next 3 years. So it's probably one where Paul and myself can sort of keep in close contact as we run up to that date to give you a feel for how things might go at that valuation.
Excellent. That would be very helpful. Yeah, we'd appreciate that. Thank you. I don't think there are any other questions. So can I just say thank you very much indeed for joining us today. It's been extremely helpful. Very, very good indeed. Thank you.
Okay.
Can I pass back to Paul, please?
That's it really in terms of the financial outturn and the outturn report. I think in terms of just to sort of frame the next meeting is the intention would be to bring the statutory accounts to the next meeting and to walk through them with as much detail as the members feel appropriate. Obviously, we'll pitch it at a level which is commensurate with previous years and have as much wide debate as possible. We're hoping. I mean, again, there are some matters that are technical of nature that the external auditors will need to review and need to be comfortable with. And if they result in change, then obviously we'll advise the members accordingly.
Okay, thank you. Thanks, Paul. Right. Okay, then in that case, I don't think there's any further questions on the financial outturn report. Thanks very much indeed for that, Paul. Very helpful. Can we now move on to item 6, review of value for money self-assessment? And I think, Deborah, you're doing that one?
Yes, thank you, Chair. Yes. The purpose of this report is for members to review the completed value for money self-assessments and to confirm that they're satisfied or otherwise to identify any significant concerns that they have. And the background to this is that under the new Code of Audit Practice 2020, greater emphasis has been placed on the effectiveness of challenge provided by audit and governance committees. And in order to demonstrate this, our external auditors have requested that both TFN management and this committee complete self-assessments. Now, the draft self-assessment was forwarded individually to members of the committee for them to comment on, and those comments have now been added. Comments in red on the draft self-assessments included with the report have been added in response to comments made by members of the committee. The purpose of the self-assessment is to demonstrate TFN's financial sustainability, governance, and how it improves economy, efficiency and effectiveness. And members will recall that at the last meeting you approved the annual governance statement, which is the review that we undertook into the internal systems of control, including how TFN demonstrates economy, efficiency and effectiveness in the spending of public money. So the self-assessments are there as part of the report. Members have had an opportunity to review these in detail before the meeting. And I'm just asking if there are any further comments the members want to make or whether they can confirm that they're satisfied with the responses that have been made. Thank you, Chair.
Thank you. And any comments on the value for money report? Liam? Liam, I think you're on mute. I think, Liam, can't hear you. Sorry. Can anybody hear Liam? No.
Liam, your speaker, you've come off mute, but there's something wrong with your microphone. I think you've turned the microphone itself off somewhere, or the volume down or something.
Still can't hear you.
Liam,
Sorry.
do you want to put it in the chat bar, and we'll take it from there while you work out your microphone issues.
Okay. Whilst Councillor Liam's doing that, if I could just sort of talk over him for a minute. This report's quite comprehensive. There's a lot of information in it, and we're answering a lot of questions as a committee, and I think it's important that we just dwell on it for a time, because obviously in the final column on there, and Deborah, this is a question to you really, and it says, does the audit committee have significant concerns over the arrangements? And it's kind of left blank, and I was just wondering, what does that mean really? Because I guess really we need to get to a point where we're saying no or yes.
Yes, Chair. I mean, I left that blank for confirmation by the committee that they have no significant concerns, or for them to raise those at this meeting. Clearly, following this meeting, following a confirmation that there are no significant concerns, then that column would be completed.
Right.
The whole of the self-assessment, you'll see that there are a number of questions raised, and against those we have identified how the arrangements have been described in the annual governance statement, which you approved last month.
Yes, it all kind of cross-references across, which is very helpful actually on that. But obviously the thing got circulated prior to the meeting, and we all looked at it hopefully, and I just wanted to, before we rush through it, just make sure that there aren't any issues in there that or areas of concern to you really, Deborah, that as a member of the committee you think might be a problem. Have you got any personal views?
Clearly, Chair, I completed this on the basis of the knowledge I have of the organisation.
Yeah.
I consider that those replies can be justified by evidence in TFN's records.
Excellent.
The reports that come to the Audit and Governance Committee.
Yeah. No, I thought it was well cross-referenced and very comprehensive. But I think it's like anything else. It's important that we just test with the officers like yourself and members of this committee that before we say everything's fine in the camp, just give everybody an opportunity to say if there's anything that concerns them in the value for money area. So I'm not getting any messages from anybody saying not, but can we try and get back to Liam's question then before we move forward? James, did you manage to pick that up?
Liam's posted it in the chat. Just wanted to check how in future years we factor this into the committee work programme so it comes to the committee first. Fully appreciate the unique circumstances of this year.
Yes. So what is the actual deadline for this, normally speaking, under a normal year?
I think that would possibly be something for the auditors to answer the deadline for this. Obviously, the normal deadline for the annual governance statement is the end of May, to be published in the first week of June, or to be published before the beginning of June. And we completed this in time for it to be taken into account in the audit, which is the purpose of that. Right.
So normally speaking, this needs to be completed and approved by this committee, really, in April, really, doesn't it? but the problem is we don't normally have a meeting then. So I think we need to just think this through a little bit. Yeah.
Can I respond on that? Because I think you're right. This is something that you should be considering at the back end of the year. So whether that needs to be April, if you've got a meeting in March, I think is, maybe not so big a deal. The requirement from my perspective really is that I've got all of the evidence that I need in order to reach my judgments around your value for money conclusion, around your value for money arrangements, by the time I sign the audit report. And for this year and next year, that is, of course, September. We then need to prepare what's known as the value for money commentary, which we can do in the weeks immediately following the opinion. We get a slight difference in the timeline in order to do that. But normally, if we can, we do the two alongside. So I think if you were to consider this at your meeting in the final quarter of the year, that would be perfectly adequate. The reality is that very little is likely to change.
Okay. Thanks. If somebody's got a dog barking, can they put themselves on mute, please? Just sorry, a dog barking over you there. Sorry. Okay. Yeah. So I think that's something for us to take forward then, and we can work around that. Can I, James, just come back to Councillor Liam's question? James?
Yes, I can read it out again. Happy with the details in the report. Wanted to check how, in future years, we factor this into the committee work programme. Was that?
Right. Okay. No, that's fine. That's okay. There's no other questions on there then?
No.
No. Okay. Perfect. All right. But, Deborah, is there anything else that you need from the committee then at this point on the value for money arrangements?
I think all I need is confirmation that the members are satisfied with the draft statements and that I can complete the column that says that there are no outstanding concerns.
Okay, then finally, if I just throw that back to members of the committee, anybody got any objections to Deborah doing that?
Happy to agree, Chris.
Happy, excellent. Thank you.
Chris,
right, okay, sorry.
Chris, I did forward a couple of comments in respect of that column to, I think it was to James at the time, just in respect of the comments that the committee had made on the reduction in grants and how we considered risk to financial resilience and provided comments on that in terms of TFN's handling of shared risks with sub-regional national bodies and with HNG. So I would like to see some of that reflected in the final sort of analysis, if that's at all possible, because it doesn't appear here.
Chair, the wording in red on the draft identifies the comments that have been added following receipt of members' comments. So under the question how we identify and manage risks to financial resilience, we've included that the possibility of change to grant funding is identified as a risk in the corporate risk register.
Is that the same point that you were looking at?
I think the point I was making was around the final column. Does the audit committee have significant concerns over the arrangements? I'd have thought it would sit within that column, would it not?
What do you think, Deborah?
Well, if members want to identify the concern in that column, it's a question of whether members have concerns that the systems we have in place to identify and manage the risk should it materialise are satisfactory.
Yeah, I agree. I think that's the point. I hear what's being said, but we just need to be careful that if we've got concerns, those concerns need to be addressed. Obviously, I think what Deborah is saying to us, they've highlighted them in the corporate risk register, and that's the right place for them to be.
If I could also come in here, I think if Kevin, if you've got.
Peter, sorry, could you just bear with me a second? Could you just bring David in first? He's had his hand up.
Yeah. Thanks, Chair. No, I just wanted to, the point I wanted to make was after I raised my hand, I think Deborah's right in that this is about, are we satisfied with the arrangement? So I think Kevin is speaking about an unease that probably we all have in this committee about the sort of volatility of funding and grants overall. But I think in terms of this form, are we satisfied that by identifying the risks, putting them in the risk register, and then looking at the risk register during our meetings and having discussions with the financial team, is that an appropriate arrangement? And so I think this is fine for where it sits in the report.
Okay, thanks for that, David. Paul, did you want to come back?
Yeah, I think Kevin, I think if we could perhaps, outside the meeting, if you wanted to, specifically articulate your concerns, because I do wonder whether it's the way that we've presented the information, and I think if there's shortfalls in the way that we've presented it, then let's try and address that. If, however, it turns out that there is a genuine gap as a consequence of something not being in place, then I think we do need to understand that, because then that results in us having to take an action to mitigate. But I think first and foremost, let's establish whether that risk actually, does exist, or whether it's a case of just presenting the information slightly differently, or enhancing it to ease your concern.
Could I add the comment in the paragraph is the arrangement described in the AGS. We have a memorandum in place with the DFT which says that in the event of grant funding being withdrawn, the DFT will work with the TFN to manage the risks. And maybe that should be made more specific, because this is the grant funding underpinning TFN's funding.
Can I come back to Kevin? Kevin, what's your initial views on this?
I think I don't want to make too much of this. It was really just to capture, in the self-assessment return that the concerns that we've debated in this committee around the reduction in core grant and also the other issues I raised around shared risks. And I wasn't quite clear where that was landing, but I'm reasonably assured by the discussion, and happy to leave that now with Deborah really, and make sure that it's reflected within the final document.
Okay, are you happy with that, Deborah?
I'm happy with that, provided I understand that there is no overriding concern that needs to be entered in the final column.
No, I'm comfortable with that now.
Well, I think it's, as you said, Deborah, I think it's cross-referenced into the risk register. So it's understood it is a risk and the risk needs to be managed. And that's the mechanism for doing it. Now, it would be a concern to this committee, I think, if at any point we thought that wasn't being managed. And then, of course, I think that would require an entry. But at this point in time, I think we're saying as a committee that we believe it is being managed. Is that fair enough?
Yeah, thank you, Chair.
Okay, right. Any further points on the value for money assessment, or can we move on? Okay, well, thanks very much. Hopefully you can take that forward now. Thank you very much, Deborah, for that. Moving now to item 7, the external audit progress report. Karen, are you taking us through this one?
Thank you. This is a very short report, actually, because of the stage that we're at in terms of audit progress. So we are just getting started on the audit now in terms of delivering the accounts audit. At this stage, given how early a stage we're at, there is absolutely nothing for us to report to you, nothing for you to be concerned about. We are on track and we're aiming to report back to you at your meeting in September, having concluded all of our work by then. You'll be aware, I think, from previous years that you've had the audit strategy memorandum that sets out what we're going to do. And so we'll come back in September and tell you what we did and what we found. The second part of this report is a raft really of publications and national reports that might just be helpful to you because you're responsible for the governance, if you like, of Transport for the North. And I guess the only one that I need to draw your attention to really is the one that's set out in paper 4, which talks about the audit timeline, which will give you some assurance that the fact that we're aiming for September is the right thing to do this year because the reporting timetables were changed by MHCLG. You'll be aware that previously we'd worked towards July, so it's now September for 21 and for 2022. So that's all I really need to say on the report. But obviously, if there's any questions about progress on the audit or any other matters, I'm happy to pick those up.
Okay. Anybody got any questions at this point?
I mean, just a question from me, Karen. Is in terms of the deadlines for this year, that's fine, but there's no assurance that these deadlines will be the same for next year. So we could well be reverting back to the 31st of July.
No, the decision taken by MHCLG was to extend the deadline for 2022 as well. So they've done it as a 2-year thing. The challenge there is that actually the Redmond report, which you will recall is the review of what happened with local audit and why deadlines are particularly challenging, suggested that we should remain at September permanently, and that's not the decision that MHCLG have taken. They have made a 2-year change. And then they will review it again. So from 2023, it is possible it will be July. If I'm honest, I think that could go either way, really. I'm not sure that the market can take it being July, but that will be just my view.
And again, our approach will tend to be to try and conclude it as much as we can, as early as we can. And then if what's left outstanding is a sign off from a pension fund perspective, well, that's it. So if as a committee and entity, we're trying to address it as early as possible, to the extent we can.
Good. Okay. Thanks very much. Thanks, Karen. So that moves us on now to internal audit. Item 8. Have we got Lisa? Are you here?
It's myself, Alex, Chris.
Alex. Hi, Alex. Thank you.
Thank you very much. I'll take the papers as read, but just to pull out the key themes of the papers. So the first one you have is our follow-up report, which is our first of the year in terms of completion. And I'm pleased to say that good progress has been made in regards to the implementation of the actions raised in the previous year. There are 3 actions which are ongoing, and you have the details within our report. Revised implementation dates have been agreed, and obviously we have the responsible officers to take them forward. You have the context in regards to those particular actions as to why they're still ongoing, but I'm happy to take any questions in regards to this report.
Any questions from members? Okay, just a couple of observations. Obviously, there's quite a lot of work going on there, and all remotely too. I guess the important thing for us as a committee is being assured that once you make observations through your internal audit reports, is that there's management action then to follow things up. Otherwise, there's no point in doing it in the first place. So there are a couple of items, 2 or 3 items which haven't been followed up, and I'm just talking generally now rather than going to specifics. Where that's not happened, what happens? Is there a kind of revised timetable done then for following those up at some future point? Is there a deadline put on it?
Yeah, no, good question. Thank you very much. So within section 2 of the report, we have an agreed revised implementation date for each of those actions and responsible officer. As part of our next follow-up review, we would make sure that these are followed up. So you have that reiterative process to make sure that they are embedded and captured. So we do cover all the actions that have been raised in the previous year to closure.
Okay, that's helpful. I think that the one area which continually sits uncomfortably with me, and I guess a lot of other people, is the IT security and such like. And it's important that to me that the cyber security review is locked down, and there's 3 actions not implemented on that one. So I just would like to just confirm that we've got dates for that.
Just to confirm, there's one action that isn't implemented, which is in regard to the penetration testing, and that is purely down to the implications of the pandemic and being in the office. So you've got a 30th of September date for completion.
Yeah.
And then in regards to the completed actions, which is in Appendix B, you have there are 3 actions that have been implemented, so that I can confirm that they've been embedded. So it's just the penetration testing that needs to be taken forward.
Right. And does that need to happen when people are back in the office? Is that what
yes, it's down to the practicalities of the completion of that. So we are, I think, from my perspective, and just for the record, in terms of continuing to embed actions, I think it's a positive reflection, given obviously the pandemic and making sure that things continue as business as usual. So I think good progress is a good reflection of the work that's been undertaken.
Okay, thank you.
Chris?
Yep. Over to you.
I just had a question. A couple of actions that are on hold until the new CEO takes up office, and I was a bit unclear as to why that was the case and why they couldn't progress, regardless really of that appointment being taken up.
Obviously, I know Ian's not on the call today, because I know he would certainly have some background in terms of the completion of those actions, but it was something we were asked, obviously, just to keep an ongoing review of them. But perhaps that's one if we can take back when Ian's back, if that's okay.
Okay, can we take an action then for that, James?
I'll take the action.
Please take it. Yeah, thank you.
Thank you.
Thank you, Paul. Take the action on that, and then we can follow up at the next meeting. That'll be good. Okay, which is surely next month, so hopefully we can get some more information on that. Any other questions on the internal audit program progress? No, I think we're good there. So thank you very much indeed. Comprehensive report, so very helpful. Thank you. So let's now move on, if possible, to the corporate risk register. And Hadi, are you with us to take us through that?
Yes, Chair, I am. Thank you. Thank you, Chair. So we are submitting the draft corporate risk register for 2021-2022 financial year for your approval. So as you know, Chair, we presented a revamped reporting template in February. Ian presented it on my behalf. I was absent, and I believe it was approved. We are now utilising this new revamped report to continue the mitigations, the identification, management and reporting of the corporate risks. But just to refresh our memories, I would like to, Chair, to spend a minute or so to describe the revised template, because we've made some changes in there.
Yes, that would be very helpful. Yeah, thank you. Yeah.
Okay, thank you. So in Table 1, the Table 1 in Section 1, in pages 3 to 5, we have streamlined the document, that page, to achieve a good and easy read. It allows the reader to quickly absorb the risk information presented in that table. It is a summary of the key risk themes, the implications, the ownerships, and the assessments. Section 2 and 3 did not require any changes, and therefore there are no changes in those 2 sections. They are simply guidance in how we assess and measure our risks and the mitigating actions, the level of controllability. Section 4, which is in page 8, details the qualitative risk analysis of our corporate risks. We have 10 corporate key themes. It starts with a table of contents, which is a new one in the document, and it provides, I think it's useful, it provides a roadmap of the risks and where the risks are in the document. So you can simply see, for example, if you want to see the decap, you can click on it and it takes you to that appropriate page. We've made some changes in section 4, which is the main bit, but I would like to draw your attention on the mitigating actions presented in a form of a table. We've included some elements, risk elements, such as the risk factors. So the risk factors is really, we think it's good for tracking. It allows you and the members to see, mitigate the first mitigation A, which risk or the set of risks is it trying to mitigate. So is it risk 1 or is it risk 1, 2 and 3 and so on and so forth. And I think that was missing in the last document. So it will hopefully allow you to help put us or hold us accountable to say, yes, we've got a number of mitigations. Which risks are they trying to solve and deal with? We've also got the status of the mitigating actions. So the status of mitigating actions is it's in a form of a drop-down list. So we can choose to say the level and the status of the mitigation. It helps to track the progress of the mitigating actions. For example, is it progressing? Is the mitigation helping to reduce the severity of the risk? If the mitigations are not helping, is it increasing the severity of the risks? So again, it helps us to have a focused view and focused management of the mitigating actions and hold us accountable to measure and track how well the mitigations are. The last bit in the mitigation section is the updated. So you can see when and how often we review and update the corporate risks. So you see dates such as 21st of May, early June, and so on and so forth. So you can actually see, again, lacking in the previous slide. So this will, again, help you and everyone else to hold us accountable and how often we review our corporate risks. That concludes the overview of the revamped reporting template. I'm happy to pause for a minute or half a minute, Chair, if you'd like to take any questions on the template before I move on to the updates relating to the risks and uncertainties.
Okay. Anybody, any comments on the template? Obviously, it's a new way of doing the risk management presentation.
I think it's excellent. So it's David here. I think it's excellent.
Okay. Thanks, David.
So much. I mean, the information is all there, and it cross-references, and I think Hattie's addressed the. I mean, we've had a number of questions over the last couple of years about the information. I think it's developed and evolved really nicely in terms of the cross-referencing and the specificity of it. And, so, yeah. Thank you very much.
There we are, some clear endorsement for you. That's good. Okay. I do like the
thank you.
The date that the recording the dates when it was updated. That's very helpful because sometimes with risk registers they can actually become quite old, and it's difficult to know sometimes whether or not they're still current or when it was last looked at, etc., etc. So the updating date there, I think, is very helpful to the committee. So that's just an observation. Okay, so we're happy with the format and the new style. So could you move on then to the content?
Yes.
Thank you.
Yes, thank you, Chair. Thank you. So I would like to provide an update on the risks, and there are three main points I would like to share with you. But I'm happy to take questions and answer things in more detail. The first thing I would like to say is I'm sure you've noticed the disappearance of the IST risk theme. It is, as mentioned earlier, it is in the winding down process. I believe the last report, we captured a narrative to say that yes, it is in the winding down process and it will be removed in the next risk report. So we've completely removed it from the corporate risk register. The second update is that we have new risks in the report, several risks. The key three ones are the NPR IRP new risk, which is describes if the IRP recommend something that's totally different. What does it mean in terms of misalignment, our reputation and credibility, and the submission of the business cases? So you can find that, I believe, in page 25 to 28. We've also included a new risk in the strategic rail section, TCR 010, mentioning about the publication of the Williams-Sharps review. And the third, equally important new risk is in the decarb risk section, decarbonisation and climate change section. It talks about the possible misalignment between the TFN investment programme and the agreed decarbonisation trajectory, if I can say the word. So those are the key main risks, new risks we've included, but there are several in the report, so I'm happy to take questions later. But a third key point I would like to share with you is we've also recorded some risk uncertainties, such as the devolution white paper, the NPR publication, and the impending comprehensive spending review. All these uncertainties continue to create high-level risks, which have been captured in the document. Finally, another factor is the I think we've mentioned this before, is TFN's lack of full control and full powers in some of the mitigations and uncertainties that I've mentioned a few seconds ago. So the lack of power and the full control is also driving the significant risks that are in the corporate risk register. But we continue to engage with our stakeholders, with our core client, and with partners and members to make sure that we are proactive in understanding these uncertainties and putting in plans and mitigations in place. So I'm happy to stop there, Chair, and take any questions that you may or anyone has for me.
Any questions on the risk register? Okay. I can't see any coming up. Just some observations really on the risk register on some of the things. We still have quite a lot of risks in the high and very high categories, and of course, we've been living with that now for the last 2 or 3 years. Do you feel that we are mitigating these as best we can, or is there anything else that can be done from a risk management point of view? Hadi? Have we lost Hadi? I think we've lost her.
I think Hadi's just dropped off the call, Chairman.
Yeah. No worries. Okay. We've lost
technical issues.
Sorry, Hadi. I think we might have just lost you. Just to say that, I was just summing up there in terms of the risk register. We've obviously, as an organisation, still got a lot of high risk impact areas, and it's very important that we keep focus on these, as that's one of the main responsibilities of the committee, making sure that the mitigations are in place wherever they are. So the status of mitigation tables very helpful. It's just to make sure that we've got an opportunity from officers and members to say if there's anything that they think can be further done.
Thank you.
Kevin?
It was just an observation on and I really like this, the new template and format. I think it works really well. But it's just one, Hadi, that seemed to stick out a little bit for me, was that there was a slight mismatch and disjoint between the summary section 1 and section 4 for the TCR02, which was the political reputational one, in that the summary is highly focused on IST and the risks around IST, but then there's no reference to it at all once we get into the description of identified risks. So I'm assuming that that's because IST will now sort of drop out. But there does appear to be a slight disjoint there in the current analysis. So it's just to clarify really how we're going to handle IST going forward as a committee.
Yeah, Kevin, apologies. I missed half of it because I couldn't fully hear what he was saying, and I don't want to give you a half-baked answer. I heard a misalignment in the summary and in the description, isn't it?
Yeah, it just seems to be in the summary on TCR02 on risk 2. It's the focus is primarily around IST, but then in the section 4 element, there's no reference at all to IST, so it doesn't reflect the summary. And I'm assuming that that's because going forward, IST now is dropping out of the register.
Yes, that's a good assumption. That it's because IST will no longer be part of our transformational program. So that's as a result of that. That's why it's been in the summary and not in the description.
Okay, thank you.
Okay, can I just bring in Councillor Liam, please? I think wants to make a point. Councillor Liam. Liam?
Can't hear you, Liam. Liam, we still can't hear you. Your microphone's off, Liam.
Even when it's on, it's not coming through. Liam, do you want to pop it in the chat again? I'll mention it.
Okay, let's take that. Whilst Liam's doing that, are there any other observations or comments on the risk register or the level of risks at this point? No. So, how's the system working? Is this working well for you, Hadi, the new system? Hadi, can you hear me?
Yes, it's working very well. It's giving us. Yes, I can. Can you hear me?
Yeah, we can hear you. That's fine. Yeah, so it's all got.
Okay, good. Yeah. Yes, it's working. It's working very well. It's giving us the ability to question more and understand the status of the mitigating actions, and making more robust assessments of the risk. So it's helping us more. It's more giving it more time to do the risk reviews, but that means this is now working compared to the last one. Although the last one was good, this is more robust and give us the ability to do what you would be hopefully be pleased to see. So yes, it's working well.
Good. Okay. James, have we got Liam's question?
It's more of a comment, Chairman. Observation from Liam Robinson. He says, observation, this is a very good candid document that references high level risk, even with mitigations still being high. Just wanted to comment that he thinks it's a very good, accurate risk register. Thank you very much.
Okay, thank you. Okay, Hadi, any other comments that you want to make? Or are you going to leave it there for this time? Okay, all right.
Yes, Chair. I think we've mentioned the predict, but yes, that's going well as well.
Perfect. Okay, thank you.
I hope you can. Can you hear me?
Yeah, we can hear you, Hadi. You're okay. Yeah, that's fine. I think there's just a slight delay. Okay, well, if there's no further comments on the corporate risk register, and I can't see any hands up, I think we'll leave it there. I don't think there's any other business. I've not been advised of any, so unless anybody's got any at this point. No, I don't think so. In that case, can I just bring to everybody's attention that the next meeting will be on the 15th of July. Obviously, it's a bit uncertain at the moment how the government regulations with regard to COVID will go for that. But if things go to plan, we'll be hoping to meet in Manchester on the 15th, but we'll have to just reserve judgment on that to a little bit nearer the time, and we'll let members know then. But the date for the diary is the 15th. If everybody could just check that they've got that. Okay, well, thanks very much indeed, everybody, for joining us today, and thanks to all the presenters for input and members for the questions. So if we sign off there, that would be great. Have a great day.